The book indicates that the Federal Reserve has been combating inflation for some time without achieving conclusive results, although they will proclaim success regardless of their actual progress. They will express sentiments such as, indeed, unemployment rates are exceedingly elevated, the Soom Rule has been breached, unemployment is escalating swiftly, and we must tackle stimulus and secure interest rates will be reduced to accommodate Trump's demands, albeit incrementally in the outset. If that fails, they will adopt a more aggressive stance and implement quantitative easing. If that is insufficient, they will also utilize quantitative easing, and Bitcoin thrives on generating profit. Indeed, it is their function. I believe we remain within a 4-year cycle. I believe the subsequent stop is 140. This is the situation. Larry Leopard asserts that quantitative easing, the government's strategy of increasing the money supply, will transpire. The issue is that we are all aware of the volatility associated with cryptocurrencies and altcoins during such periods. When will this occur? What actions will be undertaken at their forthcoming meeting? And what is the anticipated duration for tax processing? I am of the opinion that the timing of quantitative easing is crucial, as its initiation next week would impact the markets distinctly compared to a commencement 2 months later. This is due to the numerous factors that could alter the outcome. It is unequivocal that we are not seeing a boom. Indeed, prices will increase again regardless of the implementation of quantitative easing. Both alternatives will lead to price escalations, making it probable that they would choose for a strategy that compels individuals to transition to an alternative banking system. I believe the value of XRP will appreciate due to the Federal Reserve's current inability to generate revenue, which may lead to national disarray. If it is ineffective now, it is time for an alternative approach. Novice investors are becoming acquainted with this cryptocurrency, and I believe it will not be long until individuals globally begin to engage. It is vital to contemplate the future functionality of your finances. Do you wish to depend on a system that is ineffective? Given that this is likely the most crucial element of the narrative, let us discuss the forthcoming developments regarding the Fed and how we could capitalize on them. Would you prefer a currency that depreciates by 98% per century, or one that retains and appreciates in value due to a set and unalterable supply? The solution appears to be quite evident now. It is essential to note that the second U.S. Treasury Secretary recently conversed with the Cross over Bitcoin's evolution as a digital gold and a store of value. Does anyone believe that Janet Yellen would make such a statement? No. It was remarkable indeed. He is a gold enthusiast, yet he recognizes the increasing popularity of Bitcoin. Therefore, he is partially correct. Although some may be resistant to this perspective, I am unequivocally supportive of their actions. I find it remarkable that you can navigate the market, and as an observer, I believe that neither Trump nor Bissett truly grasp the arduous process that we have yet to complete. It is understood that you are unable to do so. Rectify the situation. I anticipate that by the conclusion of this term, we may initiate progress in the correct direction. Nevertheless, I must emphasize that this market evokes memories of 1987, when a substantial decline occurred over the weekend, and I contend there is a considerable likelihood of a crash. These difficulties cannot be resolved in a weekend, a week, a month, a year, or even a single presidential term. It is evident that Trump committed a significant error in the implementation of these taxes. What actions did the market take that indicated a belief that the world will change and that these stocks are undervalued, necessitating their permanent divestment? If the Federal Reserve does not issue a dovish statement on Monday and Tuesday of the upcoming week, we are unable to proceed. The conclusion that the sale may have ceased is ambiguous. This may not conclude the procedure. I wish to advise all Bitcoin holders that a single day of connectivity loss does not inherently indicate an impending market collapse. If the market declines by a further 10%, 15%, or 20% the subsequent week, I do not anticipate any significant consequences, although it is a possibility. In that scenario, I contend it would be analogous to March 2020 or September 2008, during which gold and Bitcoin will serve as safeguards as they are impervious to theft, and the Federal Reserve will be compelled to inject substantial amounts of capital to bolster the economy if the scenario I described materializes. If a single link is established, then the entire system will collapse. Individuals will liquidate their assets, a powerful entity will acquire Bitcoin, and it will become exceedingly simple to sell, prompting them to do so. It is unequivocally evident, in my opinion, and as all listeners recognize, the significant implication will be that it will be more challenging, expedited, and extensive than before. Furthermore, we experienced two significant prints in 2008 and 2020. This one will surpass those in size. However, there will be no catalyst for development or the underlying factors. Gold represents a traditional type of basic currency, whereas Bitcoin serves as a dependable alternative. Let us briefly revisit December or October of 1987. It is referred to as Black Monday, correct? I believe it is either Monday or Tuesday. Indeed, I was there in the markets throughout that period, and I was quite youthful upon my arrival into the world. We are discussing a significant depreciation of currency. And this is how the market might decline if, and it is a considerable if, I would estimate the probability at approximately 50/50. 1983, within just 4 years of employment, I was already overseeing a fund as well as my personal investments. The markets were clearly fragile and overvalued, prompting actions involving the dollar. The situation commenced when the finance secretary commented on the dollar coinciding with the introduction of a new product called portfolio insurance. They informed stock investors that we will provide insurance at a rate below the market, and if the market declines, we will automatically mitigate your losses. Thus, if prices rise, your losses will be capped, and if they fall, your losses will be minimal. This was simply a significant stop loss in the market, and I am uncertain if anyone is aware of it. It is a market that has ceased operations, indicating that all participants could sell for a 4% reduction. Subsequently, the market surged by over 4%, resulting in the fulfillment of all sale orders and escalating the first 4% to 22%. The current structure differs somewhat, however, numerous similarities exist, and I suspect that some individuals are reviewing the papers this weekend. The average investor is, "We experienced a setback last week. What actions should I take?" they inquire of their business consultant while reviewing their retirement account. Currently, it seems that the markets are poised to endure significantly more distress than previously experienced. So, if a sufficient number of participants advocate for selling on Monday, the outcome may resemble the current situation. Trump asserts that he is entirely correct in his statements. I am confident in this regard concerning the U.S. economy, the S&P 500, and alternative cryptocurrencies. The markets will decline significantly, after which the Federal Reserve will indicate the commencement of quantitative easing, prompting a sustained upward trajectory in the markets. It will entail a slight increase in discomfort in the immediate term,